Good Sunday afternoon, everyone. Hope you're having a nice weekend. I know I haven't done one of these videos in a while, and a number of you continue to ask, what happened to the videos? So it's like a grayish, rainy morning turned into a little brighter but grayish afternoon on a Sunday. And as many of you know, I do love to come in the office on Sundays as there's no phone, there's no emails, there's no distractions. So I can bang out, a lot of work. And truth be told, I played hooky on Friday. Lots of winning going on lately. So first, Renee, who many of you know as my office manager, she and her team won their pool championship the other night. So that was kind of exciting. And in Connecticut, the Amity High School baseball team just won yet another state championship yesterday. So that's kind of exciting. And in much less important and pretty much irrelevant news, my dear friend and I played in his member guest golf tournament on Friday and Saturday. And we won our tournament in a shootout Saturday afternoon, where the top 10 or 11 teams in the whole tournament had a unique and unusual playoff from the 18th fairway until all the teams were eliminated, and there was only one winner, which was us. So that was kind of exciting period. Anyway, without further ado, let me go on. Thank you for watching. As always, I do appreciate your time and your questions and your constructive comments. I guess what I say all the time is I do like constructive comments. I don't need to be told I'm an idiot when I get something wrong. I clearly know that, and I get a lot of things wrong. So, as I often like to say, it's okay to be wrong. It's just not okay to stay wrong. So we try not to stay wrong too long. But thanks for watching. If you liked the video, please give it a thumbs up on YouTube. If you have any questions or comments, always feel free to reach out. You can call the office. You can send me an email, send up smoke signals, send a carrier pigeon, whatever works best for you. So without further ado, I'm going to cover a couple of brief topics just about the markets. And I typically do these when I get the same questions and comments over and over, which tells me that a lot of people are thinking about the same thing. Let us start with everyone's favorite stock, Nvidia. I'm going to share my screen if I can find it. Let's put my cheaters on. Let's see the world now. And so what I want to do is talk about something I put in the blog, I think on Friday, which was Nvidia versus Cisco. So people were now lining up Cisco from the dot-com era to Nvidia today. As I mentioned in the blog on Friday, when people put together price analogs, where they just line up price of something in the past to something today, they look great retrospectively. And like every single price analog in history, they all end up breaking down. People love to do the dot-com bubble to the Great Depression, the dot-com bubble to Japan 1990. All these things led to pretty much doom and disaster. And they rarely, well, not really, they never work out. There's only one Great Depression. There's only one dot-com bubble. There's basically one crash in 1987, yet it makes great fodder for the bears on now social media to tell you why the world is ending, the sky is falling, blah, 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 blah. All that stuff only happens once. They're generational events. Could we have another 50% decline in the stock market? Absolutely. Are we going to have another dot-com bubble? I'm 58 years old. In my work lifetime, no, we're not. Are we going to have another Great Depression? Lord, I hope not. But it's just, we had 2007 to 09. That was a modern day, financial crisis. Things rhyme, they don't repeat. So what I did was, here's a chart of Cisco from the dot-com bubble. And yeah, it looks like Nvidia. But I can pull up the chart of a utility. Actually, you know what? I'm going to put a pin in that. Hopefully I remember to pull something else up. But here's Cisco, 1999 to March of 2000, let's just call it 15 months. No stock split a couple of times, and it goes from 25 bucks to 80 bucks. Not bad. Um, I put the volume below so you can see what's going on. This was Cisco's ultimate bull market peak. That was March of 2000. Just when the stock was splitting again, second 2-for-1 split in a year. Nvidia, I think we're on the first split right now. But I just wanted you to see it melted up, and then you'll see what happened. Guess what? It melted down. So from 80 bucks, you didn't see huge volume coming in until the stock rolled over and started to sell off. And you'll see where the stock went. It wasn't pretty. From 80, a couple of years later, it's down to like 10 bucks. And we're still not done. Okay. So the ultimate low, we'll call it 10 bucks, I think. I don't know, 8 bucks when the market bottomed in 02. So from 25 to 80, from 80 to 8. Cisco was a real going concern in 2000. It wasn't a paying for eyeballs and company without a ongoing revenue stream. Let's go to Nvidia. And people say, people say, you always pick on Nvidia. Why do you hate Nvidia? I don't. We own the stock. So we've traded it, I think we've traded it efficiently, intelligently, and effectively. But I still own it. I just think that the move has been, kind of stupid. What's happened? And look, here's 15 odd months, and stock went from, let's call it 250 to 1210. 250 to 1210, even more meteoric than Cisco did during the dot-com bubble. Several times in the way up, I've written about it. We peel back. So let's say we owned a 2% position in our portfolio, and because Nvidia melted up, that became a 3 or a 4% position. So what did I do? I may have taken it from 4 back to 3 or from 4 back to 2, and then let it run again. That, in my view, is effective, efficient, and smart portfolio management. Don't let any one position get too big in your portfolio, and then you've got too much idiosyncratic or single stock risk. That becomes gambling. Sorry, people don't like when I say that, but it is. When people come to me and they show me their portfolio, and it's got like 1, 2, or 3 stocks in it, and they're like, oh, look how much money I made. Yeah, that's great. But for every one person that loaded up on Nvidia, I'll give you 100 people who did it on all these other stocks that did the opposite. And people wonder why their portfolios, collapse. They've got huge single stock risk on a company they think they know about, and the only thing they know is that the price has gone up, up, up. So in these huge mega cap stocks, whether it be Microsoft, Exxon, Nvidia, pick your name, IBM, everyone will chuckle. Nobody has an edge. I'm sorry to say that, folks. You don't have an edge. Wall Street doesn't have an edge because those huge mega cap stocks, everybody follows. And when everybody follows something, the edge that you had before has been whittled away. Too much attention. I know everyone fancies themselves as, the Warren Buffetts of Nvidia, or it used to be Apple, and before that it was GE or Tesla, whatever but when everyone follows a stock, the edge is effectively arbitraged away. Too free flow of information. In any case, I'm digressing. Here is Nvidia. Here's the volume on the bottom. The stock just split. You're going to have it if you own it, it'll be in your account, I think tomorrow, which is Monday. Interestingly, the last run higher, and I'm really picking on it unfairly, but the last move higher volume doesn't have to keep expanding, and it won't. But this last run at post earnings, here it was earnings, came on, I would say less than enthusiastic volume. It's fine, but just a little bit of a warning sign. A lot of people have asked me, what do you think about Nvidia and doing with it on the stock split? So when it was first announced, after the amazing and just a wow of an earnings report, I said it's probably a run into the split, like most high-profile stock splits are, but I think it's more of a selling opportunity than a buying opportunity. And that's because you only had a couple of weeks. You really have to pay attention. You can't get caught holding the bag. So now we're at the stock split. What do I think? I think it looks more like a sell than a buy. Could it go to 1,300? Sure. I thought it would go to 1,000 after earnings. But from here on, I think most of the, or all, much of the smart money has exited the stock because of its meteoric rise. Many people keep a small pilot position, but anyone who's had, ginormous gains and wasn't going to fret about what could be huge potential capital gains probably had sold most of their stock. It's all good. I think eventually, look, the stock's going to correct. And I know people will argue and call me names. Well, this is different. No, it's not. There's nothing different in the markets. Yes, I understand about the chips and AI. Trust me, I do. However, this is no different than GE in the 1990s and IBM before that, and Cisco and Microsoft, and then Google when it came out in 07, and then Apple for the last 15 years, and to a smaller degree, Tesla, and now it's Nvidia. Human nature, investor behavior, it does not change stock to stock, generation to generation. Greed and fear. We just go greed to fear, back and forth, back and forth. I call them different names, despondency, giddiness, and I'll throw in other adjectives too. But investor psychology is the same as it was from the days of Jesse Livermore in the 1920s and 30s. That's what I just wanted to show you. That was Nvidia and Cisco. And stand by. Let me just stop my screen share. So, oh no, whoa, now you got to look at this. My wife said this morning, why are you wearing a black hat and a black shirt? I mean, you look somber. And I just wore my black shirt because it's an Amity baseball shirt. And my Kirkwood's baseball hat was on the floor of my closet because our closets are really tall. And then one of the cats likes to live up on top of the closets and push everything down to get attention. So it was on the ground. I picked it up, I put it on. Makes me look more great too. All right, I digress. In any case, let's move on. So we did Nvidia, we did Cisco. I want to comment on the election. It's obviously it's full election season. Donald Trump got convicted in New York, and that is now, so regardless of what political persuasion you are, this is what I think. One, as I've mentioned over and over, the election is meaningless for the stock market, even less meaningless for the economy. It does not matter. Trump, Biden, Democrat, Republican, irrelevant till at least Halloween. And I can prove that out over 90% of the election. Market doesn't care. Market cares about certainty. And right now, assuming both candidates remain alive, then we've got one of them will be the next president. We can argue who it should be and why. It's irrelevant for this conversation. The market doesn't care about the election. People ask me, well, what about Trump being a convicted felon? Market doesn't care. What about Biden and his gaffes? Market doesn't care. What about the upcoming debate? Market doesn't care. The market cares about what the market can control. Markets like certainty. What about what's going on in Israel and Gaza? Market doesn't care. Now, if the US put troops on the ground in Ukraine, put troops on the ground in Israel, Gaza, market would care more. If there was some kind of military action that impacted the flow of energy around the world, market would care even more. But these other things regarding the market and the economy, they do not matter. What does matter, so I'm sure I'm going to get emails and texts about or calls about, how could you say that about Trump? How could you say that about Biden? My job is the markets and the economy. Everything else from a work perspective in that regard is irrelevant. So let's think about what things matter. Well, interest rates and the Fed, they really matter. So let me segue and share my screen again. Put my cheaters back on. I do love my cheaters. This is a chart I show all the time, and guess what? I'm going to show it this Wednesday because the Fed is meeting, and the Fed's not going to cut rates. They're not going to raise rates. But this solid line is the Fed funds rate, the only interest rate the Fed controls. It's the overnight lending rate to banks. A whole bunch of rates depend on the Fed funds rate, like the prime lending rate, like your credit card rate, like your home equity line of credit rate, auto loans. But really, it's the overnight lending rate the Fed charges, bank to bank. And it remains between 5.25 and 5.5%, way up here, averaging roughly 5.33%. The 2-year Treasury note is below. It's this stuff in red and black and white. And that is usually the best predictor of Fed action. What is the 2-year Treasury note? Back in 2020, when I was screaming about inflation coming and the Fed needing to raise rates in August of 2020, the 2-year was telling the Fed it needed to go up a little bit. The Fed ignored it for a year, and then look what happened. The 2-year note screamed higher, and the Fed frantically panicked. Yes, Jay Powell and the Fed panicked to raise rates high enough and quickly enough. And then at the end of 2022, when the lines met, I said, we're now at equilibrium. It doesn't mean rates had to go down, but they could go sideways or up together. And they stayed that way until the miniature banking issues with Silicon Valley Bank and First Republic and Signature Bank in March of 23, when the 2-year note began to fall. But look what happened. Since March of 23, the 2-year note has stayed below the Fed funds rate, which tells you the next move coming is somewhat of a rate cut. Somewhat of a rate cut? No, a rate cut. But we're only at roughly 1/4%. So right now the market's telling you the Fed is only a 1/4 point from where the market wants it to be. And I've written this a number of times, and maybe it's a little wonky for folks, but if the 2-year Treasury note gets to 5.5% or higher, the Fed's in trouble, because it means they are so woefully wrong yet again. Now, I don't think that's happening. It's not what we're seeing now, but hey, we can always be wrong. If the 2-year Treasury goes to 5.5, we have a totally different landscape. We have a different problem, and a big problem. I don't think that's the right scenario or the likely scenario, but it's possible, not probable. Right now, the market wants the Fed to cut by 1/4%. And I think that's probably on tap for later this year. If you remember, coming into 2024, the market was looking for 6 to 7 rate cuts this year. I said something to the effect of the market's on crack. There's no way the Fed is going to cut rates 6 to 7 times without a major economic, geopolitical, or fiscal crisis. I didn't see it happening. Our work said Fed cuts 2 to 3 times, with the risk being less. Right now, I think they're cutting 1 time later this year. Could they cut twice? Sure. I think Citi and Goldman, who came in looking for 6 rate cuts, I think they're now down to like 4 or 5. But one thing we know about the major Wall Street firms, they're usually wrong. And people say, well, that's kind of arrogant of you to say. I mean, I just call it like it is. Go look at their history. Citi, Goldman, Morgan Stanley, they have a habit of being, perennially and habitually wrong. That's just how it is. A topic for a different day, but I could pull up, I've got data back to 1990 of all the major firms and all their forecasts, and it's amazing how often they are wrong. I mean, I've never met groups that get paid seven figures a year to be wrong, but that's just the case. And that's because they're never held to account and they're not compensated based on the correctness of their forecast or their modeling. It is what it is. So in any case, I digress. I'm going to stop the screen share and tell you once again to take off my cheaters. So that's where we are coming into the Fed meeting. That's what I think of the election, and that's what I think of Nvidia and Cisco. A few people ask all the time when I post some of the stuff we buy or sell on the blog, what our portfolio looks like. You can always ask me. I will share 99% of everything we do. If you ask me a question, you call me or you email me, I'm happy to share. Our portfolio looks like the Apple column and the Meta column. These two columns look like our unloved gems portfolio. It could change tomorrow. It could change next week, next month, next quarter. I have no idea, but that's what it looks like. So if you're looking to see what we own, just ask me. I'm not one that's big into secrets. If a lot of people want to know when I make a comment about our next target is Dow. I think our next target I wrote was Dow 50,000 before the bull market ends. You want to know where we arrive at that? I'm happy to share. It's a little wonky. It's a little quantitative, but there's very little I won't share about what we do. You can do it on your own. You don't need me. Most people like to have their hand held. Okay. But those who've been watching us for a long time, you know that we are active in the markets. I like to buy and sell where I think we have the slightest edge, not a huge edge, but a slight edge. And that's all we're looking for when we make transactions in any of our portfolios. Finally, we are launching a new strategy. My money's already in it, but I think we'll probably launch it July 1. It is a takeoff of another strategy called Spectrum. Spectrum looks at all of our strategies, all 17 of them, puts them in a grinder, and we own 2 of our strategies each and every month. And that was from an idea back in 2018 where a client said to me, I don't know which of your strategies to own. I want you to tell me every month which to own. I said, I have no idea. 1 month performance is random. I don't know. So we spent a couple of years and developed an algorithm that chooses which strategies to own. We've run that, I think 6 years, 7 years, something like that now. And this latest one is a compilation of our most conservative strategies. I think there are 5. It's going to be called Spectrum Conservative. It only traffics in our most conservative strategies, which are all bond market related. And the idea is to really control the downside, limit downside losses. We seek to do less than 10%. Seek, goal, that's our objective. No guarantee we'll be able to do that over the long term, but that's the goal. That's how we modeled it. But in return for that, limited downside, you're clearly going to have the upside capped at some number also. So if you're interested, let me know, send an email, reach out, give us a call. Happy to walk through what our thought process is. And I think that's it. Again, you have questions, let me know. I'm happy to have a conversation. You can call or email. If you like the video, please give me a thumbs up on YouTube. Next time, I shall not be wearing any black. No black hats, no black shirts. Again, congratulations to the Amity High School baseball team, Coach Sal Coppola, on yet another state championship. They have become, kind of the Yukon basketball of high school baseball in Connecticut. So it's great to be part of a winning culture and winning community in town. Congrats to all the kids who play. Nice going, and I'll see you guys soon. Thanks again. Bye-bye.